Hey everyone, it's Eric Green. Thank you for joining us this week's podcast from Tax Rep Network. This week is going to be a brief podcast. I'm a little behind in doing this because we literally just hosted and wrapped up the New England IRS Representation Conference, the fourth annual, had 300 accountants join us live at Foxwoods, another 350 live via webcast from all 50 states and 8 countries, another terrific conference. Thank you for all of you who joined us. What I want to talk about briefly is offers and installment agreements and why you need to be all in. Okay. I get this question all the time. I got it at the conference. I got it today via text message from one of our tax rep members. And I want to describe to you what the question is and then explain why you need to be all in when you're doing this. All right. But again, if you're new to the podcast, I'm Eric Green from Green and Sklar's. You can read all about me. I'm I'm a former chair of the Connecticut Tax Bar. I'm a fellow of the American College of Tax Counsel. I'm the author of The Accountant's Guide to IRS Collection and The Accountant's Guide to Resolving Tax Debts. I'm the founder of Tax Rep LLC and Tax Rep Network, where we coach and teach accountants to, handle resolution and representation matters. You can go check all that stuff out. I've given you links here if you're watching the video of this and not listening to the podcast in iTunes. But so I want to talk about why you need to be all in. So here's the question that we get. I get a lot of is, look, my client owes from 2005 to 2015. We'd like to do an offer on 05 to 11, and then we want to do an installment agreement on 12 to 15. You can't do that. All right. The government does not do this piecemeal. The IRS doesn't do piecemeal agreements. So when I say you need to be all in, whatever you're going to do to resolve this, whether it's going to be uncollectible status or offer in compromise, or you're going to seek an installment agreement, it has to include all periods. So you can't compromise some and then, get into an installment agreement on others. It needs to be all in. Okay. So if you're going to do an offer in compromise, you're compromising everything. So what'll happen, and again, we get this a lot, at least several times a year. People come in and say, look, I owe for 05 to 12. I haven't filed 13 through 16 yet. I want to compromise the old stuff first. You can't do that. Remember compliance. Okay. If you've listened to the podcast, if you've watched my offer program, the first thing we need to talk about is tax compliance. You need to be in compliance. So what's compliance? Compliance is that you have filed all the returns that are due as of this date, at least the last 6 years, and you're making your current tax payments. So if you're a wage earner, you're having the proper withholding done. If you're self-employed, you have made your current estimated tax payments for this year. And if you're a business, you've made your current period tax deposits. So the person that comes in, they haven't filed the returns, in the last several years. They're not in compliance. They are not eligible for an offer. And what I need to explain to them, and what I want you to understand, is when you go to do this, everything has to be in. And in many ways, you're better off with the bigger number. Let me explain. When you go to do an offer, one of the criteria that government will look at is, do you have the ability to full pay over the life of the statute? Meaning, if you start making monthly payments and we get the equity that you have in assets, do you show the ability to full pay the liability within the time remaining on the 10-year collection statute? If you do, you are not eligible for an offer in compromise. You have to get into an installment agreement. So it's counterintuitive, but in many ways, you are better off owing more money, because the more you owe, the less likely you are to be able to pay. I'll tell you a story where I really messed this up. Had a client come in, client owes about $450,000, and they're saying, I really don't owe this money. And so I look at it, and sure enough, it appears very obvious that the government has carried the same 1099 into 2 years, when the client has proof that he didn't work at that job during the second year. we submit the documentation to the IRS. They agree, and they bring the number from 445,000 down to about 39,000. Right? You think I'm a hero, right? I got rid of $410,000. Well, then the client said, well, now I want to do an offer. Well, now he can't do an offer because at $39,000, he has enough money left over each month in the RCP calculation to full pay. So now what happened is, had I left it alone and done an offer, he would have ended up compromising it for around $3,500. But instead, he ends up now having to pay $39,000. So there are two lessons in this. One is, I should have gone through the entire process with him and said, look, let's say we get this down. What is the ultimate goal here? Well, I want to do an offer. Well, if I'd done the math, I go, you know what, forget it. We're not going to fight the liability. Let's just file the offer. But instead, by challenging the liability, I brought the number down sufficiently that he couldn't do an offer. All right. So the lesson one is, you want to think this through. I mean, in my defense, he never mentioned offer and compromise when he came in. He was all hell-bent on getting rid of the liability. So what's my point here? All right. When it comes to doing anything, whether it's installment agreement or offer, we need to get into compliance. Okay. But whatever you're going to do, you want to be all in. And when it comes to an offer, do the analysis first. All right. You got to do the RCP analysis first. And in my case, that may change your strategy. I wouldn't have challenged the liability. I would have simply done the offer, knowing on paper he couldn't full pay at $490,000, $440,000, whatever it was, and we could have compromised it for a few $1,000s. Okay, but when it comes to offer and installment agreement, there are no piecemeal deals. You got to be all in. What I mean by that is, it's all on the table. Everything is in. You're compromising it all, or you're doing a payment plan on it all. You cannot divvy it up and break it up. The government doesn't do that. All right. So sorry for the short podcast this week between the conference on one side and Thanksgiving tomorrow on the other. I thought it was okay if we kept it short tonight. Listen, if you still want to claim your discount, the new guide to resolving tax debts, use TRN25. If you go out to tgpublish.com and get the brand new guide to resolving tax debts that is out, it'll start shipping November 30th. All right. That will give you your discount on the book. All right. If you want to get the book for free, as well as all of the webinars and the other stuff, including the New England Rep Conference, join TaxRep LLC. Go out to taxrepnetwork.com, sign up. All right. It's a monthly membership that we have. We do coaching. We do, webinars. We're helping our clients, all right, which are our members, build their practices. I had 2 members last year tell me that they increased their practice by $100,000. I am in the middle of creating a marketing plan, because the challenge for 2018 to all my tax rep members is, this is the year. 2018 is the year we're adding 100,000 to everybody's business. All right. That's my challenge. I think we can do this. So I am creating the marketing roadmap. I'm going to begin rolling that out at the end of December to all of the members. And this is it. Whether it's hard or easy doesn't matter. We're doing this. All right. We're going to get everyone an extra $100,000 of business in 2018. All right. And if you're watching this on Facebook, or you're watching this in YouTube, go out to iTunes, catch the podcast for free every week. All right. Thank you all. I hope everyone has a safe and happy Thanksgiving. And I'll be talking to you after the holiday. Bye-bye.